Well, the Dow brushing off tensions with Iran and pushing higher right now, briefly trading at a record high for a moment. It's still on pace, though, for the best month since 1938. I want to bring in Visions 4 Funds Vice President Heather Zumaraga and Kingsview Asset Management CIO and FBN contributor Scott Martin. Heather, a lot of this obviously revolving around the Federal Reserve. Wall Street thought about it, came back yesterday morning and started buying. And then this morning, even though we gave some back, I thought it was interesting. We heard from 3 Fed officials. Bullard, who was a dissenter, along with Kashkari, who doesn't get a vote this year, but he does next year. He said he was pushing for a 50 basis point rate cut. And then Bernard, she seemed to say, okay, or suggest that maybe they stay the current course. But whoa, this is really adding some intrigue to what the next move could be from the Fed.
It really is, and Wall Street is expecting a 100% rate cut. Goldman Sachs calling for 2 more rate cuts this year. But I think that might be a problem, because if we do have a true recession, the Federal Reserve doesn't have a lot of room to cut rates. That's the biggest danger. And if you look at the markets at all-time highs and the S&P, the Dow and the NASDAQ not too far behind, and the economy is pretty strong right now. I know there are signs of a global slowdown and weakness overseas, but the U.S. economy, unemployment at 50-year lows, GDP, wages rising. I mean, you and I talk about this all the time, that the economy is pretty strong, and that's why I don't think it warrants a rate cut right now.
In the meantime, though, Scott, Jay Powell is clear. Yesterday, the first thing he said before the presser 2 days ago was, hey, our job, what he wants to do is to keep the expansion going. He is going to try his best not to have a recession in this country, even if it means taking preemptive action. But he doesn't want to have to deal with the market dipping or the economy dipping or a recession, because maybe 25, 50 basis points won't be enough anyway if that happens.
Well, and I think that's what the market liked, Charles, is that Powell is getting ahead of whatever recession may be coming. And I'll tell you what else, too. In the statement, Charles, the Fed was increasingly dovish than where they were, say, just a couple of months ago. So the market is looking at the Fed as taking clues from the bond market. And certainly, yes, economic data is still strong, but it has been, say, moderating, leveling off a bit. So to me, the Fed is on track here for certainly, yes, a rate cut in July, maybe a bonus one after that. And I think that's why the market's rallied so hard. Yeah, in March, I think it was 0 participants looking for a rate cut. This time around, you had at least 8 looking for 1, 7 looking for 2. Scott, I want to go back to you real quick, because you went into gold. Gold went on a record run. Great move, my man. I wanted to give you kudos on that. Are you still in gold, or have you rotated back into any equities here? We're holding them, Charles, because, we added gold alternatives like FXY, which is Japanese yen, just to kind of hedge off some volatility that we were seeing in fixed income and certainly in equities. So we still have gold here. I don't know if I'd just add to it just now, but certainly are holding it because I believe more volatility is coming. Yes, we have the Fed being a little bit more dovish. We have central banks around the world, too, being more dovish and accommodative, so that should lift gold prices.
Heather, when markets hit all-time highs, there's this anxiety. Is it time to sell? But for others, it's actually a time to buy. These breakouts, look historically, when the market has broken out at these kind of points, they've made some pretty good longer-term moves. Where are you right now with respect to that?
Well, right now, if you're a long-term investor, I think you stay in the markets. I think we have 2 potential headwinds that could be resolved. The trade tariffs with China, if that could be resolved at the G20, or not resolved, but at least we have positive revelations occur that ease any tensions between the 2 countries. And you have the Fed on the back burner right now. They're going to be accommodative, even though they didn't cut rates this week. They're hinting that they may, and that word patient was taken off the table. And Fed Chair Powell saying that there are many uncertainties around the world, and they're willing to use the tools at their disposal if need be. So whether you like it or not, markets are rallying on the Fed.
All right, Heather, thank you very much. Scott, thank you very much. Both of you guys have a great weekend.
Thank you.
See ya.